Hi everyone, this is Jay Harris coming to you from Tom's Trading Room, and in this video I'm going to go over another stock ranker. This time we're going to specifically focus in on the Stochastics oscillator. As we click on stocks, stock rankers, and then stochastics, we bring up the Stochastics Rankers page. We're going to click on help and bring up a tutorial on what the stochastics are, when they were created, who created them, and basically it's a momentum indicator, and it's comparing the underlying closing prices to the price range over a specific amount of time. And there are three primary stochastic values as listed here: percentage K fast, percentage K slow, and percentage D. Now I'm going to refer to these stochastic values as lines, as when we plot them on the chart they're going to show up and look like basically moving average lines. Now what the stochastic oscillator values represent is the position of the stock on a percentile basis versus its range over the previous N trading days. The percentage scale goes from 0 at the bottom to 100 at the top. Now we're looking for these percentage K lines or the percent D line to be either in an oversold zone. On the percentage scale, from 0 to 20 is an oversold zone. From 80 to 100 is an overbought zone. What we're looking for is these stocks to have these values plotted on the stochastics view in either an oversold or overbought zone and breaking out of those zones. So if you have a stock that has the oscillator in the 0 to 20 or oversold zone and it breaks out or breaks above the 20 line, that's a bullish indication for possible prices higher. If you have a stock and the oscillators showing it trading in the 80 to 100 zone, that's the overbought zone. And what we want to see is that oscillator break down below the 80 line, giving an indication that there's potential lower prices to come. Let's talk about that in just a moment. The fast stochastics line, as you see down here, it's referred to as being too volatile, and it tends to have little or no trading value on its own. So we'll kind of smooth that out or slow that percentage K fast line down with the percentage K slow line, and it uses a moving average, as does the percentage D line. It's a slowing of the percentage K slow line, and it also uses a moving average. Let's go ahead and give you some visual representation as to what we're talking about here. We again are looking for stocks in an oversold or an overbought area, and the oscillator calculates the overbought as 80 to 100 and oversold as 0 to 20. And out of the wizards that you can choose from over here, you have the percentage K slow line that you can look at it breaking out of the oversold zone and crossing above the 20 line, or breaking out of the overbought zone and crossing below the 80. You can do that with the percent D line as well. The other thing you can look at is the percentage K slow line crossing up above the percentage D or down below the percentage D. And a bullish cross is where it crosses up above, and a bearish cross is where it crosses down below. It's defaulted to the percent D crosses above line, which means it's oversold and it's breaking out above the 20 percentile line, which gives an indication of possible bullish prices higher. Let's click on search and see what we can find. We have 0 stocks that met that criteria, which means that there are no stocks in the oversold zone breaking out above the 20 line. And today was a pretty severe down day. It was about 250 to 300 points down. So it stands to reason that there wasn't a lot of bullish crosses above. So what we can do is a search reflective of the day's trend, which was to the downside. So let's click on the percent D crosses below, which means it's in the overbought zone, and it should be crossing down below the 80 percentile, showing a possible downside move in these stocks or ETFs. Let's click on search, and when the page populates, you see that we have 9 candidates that met the criteria here. Energizer Holdings. Let's click on the chart for ENR, and let's get a visual representation of these stochastics now. There's the chart, and underneath that is the stochastics view. You have the slow stochastic or the percent K slow line, which is the teal colored line, and then you have the percent D line, which is the olive green colored line. And over here on the far right, you see that the percentage D line did cross down through the 80 percentile line, so that gives us an indication of lower prices to come, and we did have a bearish day. The day did close in the bottom part of its range. Another thing I want to point out here, folks, is there are times where you click on a stock and the stochastics will show you a view like this. You see that the teal line, the slow stochastic, just minimally broke below the 80 percentile. That should indicate that there's possible lower prices to come, but it did not get the confirmation with the percentage D line. You see that the percentage D line stayed in that overbought zone. And what did the prices do? Kind of consolidate and move a little bit higher. But when the percentage D line did cross down through the 80, it's more reflective of lower prices in the stock, as you see the down bars up above. So in a sense, folks, that percentage K slow is more of a leading indicator, and the percentage D can be looked at as a confirming indicator. So you don't want just the one to break below or break above. You want them both, and more specifically, as the search was instructed to do so, find the percentage D line breaking down below the 80 in this case. You can go through the rest of the stock list and take a look at those views and see which ones look the juiciest for you, and when you find one that you particularly like, just go ahead and go back to the list, click on the ticker symbol, and you'll bring up an options search page, and you can go from there about building trade scenarios. Hope you've enjoyed that, and catch me on future videos. And any questions or concerns, find me at support@tomgentile.com. Thanks.